going into our afternoon and then into the second half of the week. You get to Wednesday afternoon and you're halfway through the week. You're looking at what the trend is for the rest of the week. What I'm going to take you back to is might seem a little off, but I'm going to take you back to 2000 and 2007. And the reason I want to do that is because we have some very similar types of price action that are very difficult to find inside of our markets other than these three examples. And there, of course, are others, but the year 2000, the year 2007, and this most recent 11 to 12 day rally that we have had here are so very similar in structure, and you're going to see that here in just a moment. This is the year 2000. We had come off of a previous high. We had broken through a series of long setups from our previous 1999 lows to highs. And instead of running right off and selling off inside of a series of shorts, we had this capitulation bottom down here, and we squeezed right back up into a new all-time high. Well, there were traditional long setups that led us up into that event. And as you can see here, the traditional long setups, these are daily charts, completed and then blew through their targets and then started extensions. And then the extensions defended coming out of March 21st and then went to and through their profit targets. And that's where the markets went into extensions of extensions. And it's actually very rare for the markets to go this far in extensions of extensions. Well, once we rolled over, that capitulation top created the 2000 tech bubble highs. Now, I'm going to take you back a couple years, several years later to the year 2007. And we had run into a previous high. We had completed a bunch of profit targets inside of extensions. And then from the lows of the year to highs of the year, we broke through a 61.8% line of a long. I'm going to focus in on this because this is a very similar type of situation that we had to 3 Mondays ago now. So when we broke this long from lows in the year 2000, we started selling off inside of a 50% short. And we sold out from that resistance level. We slammed into a profit target. And it was over a Thursday, Friday, where we squeezed away from those levels and then squeezed right back up into highs and created this double top type situation. But I want to focus in on how we returned to that previous high. We returned to that previous high inside of traditional long setups. And then those traditional longs, they traded 2 pullbacks, and then we went into extensions. And then extensions traded their long setups and then ran to targets. And then we broke not only the extensions of the extensions, but the same anchor to new high extension long levels. And as you can see here, we had 50% shorts all throughout 2008. You can see here 50% shorts. This is where Bernanke cut 50 basis points and we squeezed back up into resistance, finally completing profit targets here in September of 2008. And then we came into another traditional short setup, which then ran into profit targets. We then had traditional shorts here running into another resistance level. Let's get rid of these previous setups here. A little bit easier to see when they're not all stacked on top of one another. We had another traditional short target that was completed. And then from the October highs to lows, our last profit target, our last low, completed. It was 666 on the S&P 500. And the reason this stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.